Welcome to the Deep Dive. So today we're looking into something really interesting, a bit of a paradox actually right here in Toronto, the housing market. Well, prices have dropped, interest rates are down, but things are still stalled, stuck. So for you, the curious learner, we're going to unpack why. This is our deep dive into Toronto, affordability versus fear. Our mission, to try and pinpoint this sort of invisible force that's holding back recovery, even when the numbers look, well, mathematically better. The big question is, why is the market stuck when affordability, on paper, seemed to have improved?
It's quite striking, isn't it? Because the raw data might point one way, but the feeling out there, the sentiment, that tells a totally different story. We're really seeing what you could call significant crisis of confidence.
The crisis of confidence, okay.
Yeah, even the governor of the Bank of Canada flagged this extraordinary uncertainty, and it seems to be stemming directly from United States trade policy.
Right, that trade policy issue keeps coming up. Can you give us a bit more detail? Like, what specific tensions are we talking about, and how are they creating this uncertainty?
Well, the source material points to some pretty hefty measures from the U.S., things like 50% tariffs on steel and aluminum.
50%, wow.
Yeah, and 25% on most other imports, plus 10% on energy imports. So it's broad. And the impact isn't just theoretical. We're seeing concrete effects. For instance, Canada's exports actually dropped 10.8% back in April 2025.
Okay, a direct hit to exports.
Exactly. And all this feeds into consumer sentiment. The result, a consumer confidence index that's, well, historically low at 44.2.
44.2. What does that number usually look like in, say, a healthy economy?
Oh, much higher. You'd often see it well above 80, even 90 sometimes. So 44.2, that signals some really deep unease. People worried about jobs, about the economy's future.
That level of worry, it must be filtering into big decisions like buying a home. So how is this playing out specifically in the housing market? Let's look at condos, maybe Q2 2025 year over year.
Yeah, the condo numbers really show it. We've seen a pretty significant drop in sales activity, down 20.9%.
Down over 20%.
Yeah.
And at the same time, are more condos sitting on the market?
That's the other side of it, yes. While sales were down, active condo listings surged. They jumped by nearly 40%, 39.3% to be exact.
Okay, so sales down sharply, listings way up. What about prices?
Prices followed suit. The average GTA condo price actually decreased by 5.9%.
Fewer sales, way more listings, and lower prices. It does sound like a market under pressure.
It really highlights what some analysts are calling a tale of two markets.
Two markets. How so?
Well, you've got the freehold market, detached, semi-detached houses. That seems more resilient. Prices there are mostly flat, not really falling.
And why is that, do you think?
It seems to be driven more by end-user demand, people buying a home to live in, maybe less speculative. But the condo market, that appears much more vulnerable right now.
Vulnerable because?
Primarily because of challenges for investors combined with this wave of oversupply, lots of new units coming online, perhaps.
Okay, so let's tie this together for the listener. We've got improved affordability, mathematically speaking.
Right.
But this widespread economic fear, this crisis of confidence, it's overshadowing the positive numbers. Is that the gist?
That's exactly it. I mean, let's look at the concrete figures from the sources. The average condo price dropped from $734,129 in July 2023.
Right.
Down to $651,483 in July 2025. That's a noticeable drop.
Definitely. And the mortgage rates.
Also down significantly. The typical 5-year fixed rate went from 5.79% down to 4.09% over that same 2-year period.
So cheaper prices, cheaper borrowing costs. On paper, it looks like a better time to buy.
Precisely. The math works out better.
And it's interesting, you mentioned investors. Our sources note that one-bedroom units make up about 34% of condo sales. That's a big chunk. And that segment is often popular with investors, right? Who might now be feeling pressure from the rental market or just general uncertainty.
Exactly. It's like you said earlier, a bit of a domino effect. These big picture trade issues trickle down, impact investor calculations, rental market dynamics, and that feeds right back into overall market confidence.
So looking ahead, it sounds pretty uncertain. What are economists predicting? Are more rate cuts expected?
Yes, the consensus seems to be pointing towards more rate cuts by the end of 2025. The Bank of Canada's policy rate is forecast to land somewhere between 2.0% and 2.25%.
Which normally would stimulate the market.
Normally, yes. Lower rates are the usual cure for a stalled market. But here's the critical insight.
What's that?
Their power seems to be muted right now, muted by this crisis of confidence we've been talking about.
So confidence, or the lack of it, is kind of overriding the normal economic livers. But couldn't you argue that if rates stay low enough for long enough, affordability has to win eventually?
That's the million-dollar question, isn't it? It's possible. But when you look at the whole picture, the sources suggest the real deciding factor, the thing that could tip the scales. It's how that U.S.-Canada trade situation evolves. Will things smooth out and restore confidence? Or will tensions persist and maybe even deepen the economic slowdown? That seems to be key.
So we're left watching this tug-of-war in Toronto's housing market. Will the lure of lower rates eventually overcome this lingering fear? Or will the fear keep the market stalled? Something for you to think about, how these big global trade policies, things that might seem really distant, can actually ripple all the way down to affect local sentiment, the local economy, and maybe even your own personal decisions about something as significant as buying a home, even when the numbers alone might point you in a different direction.